The wall of worry for investors has been a pretty tough one to climb in September. We've got the Delta variant, earnings headwinds, and a potentially tired market all playing a role here. But while September is usually a down month, there could be light at the end of the tunnel. According to Bespoke Investment Group research, in years where the S&P 500 has made the kind of gains that we've seen this year, the index actually tends to go higher the rest of the year. In other words, history is on your side, at least by this measure. Joining us right now is Sarat Sethi. He is managing partner and portfolio manager at DCLA. He's also, of course, a CNBC contributor. And Sarat, what do you think? Are you worried about this month of September, or are you thinking that, hey, these gains will continue?
So I think in the short term, Becky, very hard to tell. I mean, every strategist out there is calling for this correction. We've had a 5% correction since last October. We're still long. I'm not trying to time this market. I think there are plenty of opportunities within the market. And if you do have cash on the side, I think you can dribble it in at this point. 20% run has been pretty high. But, when I'm looking out 3 years, I'm not trying to time it. I'm not saying, hey, I want to get out because I think we're going to have a secular decline. I think the market's got an uptrend. And if we get some bumps along the way, then that just gives us more opportunity to either put new money to work or revisit some of our theses and get new ideas in there.
Sarat, that was a very smart answer. Good job not taking the bait, because I think it is impossible to time these things. And by the way, everybody waiting for the dip, you may wait for another 10% up before you get your 5% pullback on these things. So you're saying don't worry about it, don't stress, just look for the good prices.
Look for the good prices, and valuation matters, Becky. I think we're getting to a point now where a lot of the easy money was made because rates were so low. If you put money into growth stocks, they were doing great. It didn't matter. But I think the market is being a little more careful. And if you look at some of just the history of stocks just over the last couple of months, and companies we like, I mean, look at Uber, down 40% from its peak. They brought down earnings and said, we're going to actually be cash flow positive in December. Now we'll see if that happens, but they're not getting the benefit of the doubt. Comcast, just a couple of days, brought down earnings. We still love the story. I think it's a great cash flow company. So you're going to have opportunities here to buy some really good quality companies. At the same time, I think, once we get into earnings season, some of the companies that are trading at sky-high valuations need to make their numbers. And if you look at where we are with commodities and supply chain, if they have a demand issue, that's going to hurt companies a lot more than supply. I think you're still going to get a pass on supply. But if demand and margins are coming down, I think money's going to move to other areas.
Okay, that's a really good point. We should point out Comcast, by the way, is the parent company of this network, CNBC.